But again, every economy relies upon a little bit of inflation to sort of maintain growth at a certain rate. So gold is, there's only so much gold in the world. They can fit into a size of an Olympic swimming pool. So I think gold has always been sort of the go-to metal as a safe haven for U.S. dollar devaluation.
Welcome to Rethinking the Dollar. Today I'm excited to have my guest, Mr. Jeff Swinoga. He's the president and CEO of First Mining Gold. He's a 25-year-plus veteran and international experience in mining and finance. Today he's joining us to share his thoughts on the global economy as well as the mining sector. So Jeff, welcome to Rethinking the Dollar.
Thanks, Michael, and it's a pleasure being here, and thanks for having me on. I really appreciate it.
Well, I'm looking forward to having a good conversation with today in regards to the economy as well as the mining sector. I know you guys have some good things going on up in Canada. And so before we dive into the actual mining sector, where I'll be looking to learn a lot myself, I want to get your thoughts on some economy things out here in the United States of America. And so the very first question I tend to ask about rethinking the dollar. And the first question is, what comes to mind when Jeff hears the words rethinking the dollar?
Well, I guess it can mean many things. The U.S. dollar has been sort of the backbone of the global economy for a number of years, and even since it came off the gold standard back in 1971. However, recently there has been a lot of it's sort of an inflationary environment that's being created here. The debt is up to, I believe, 21 trillion. So there's a lot of concern about the value of the dollar going forward. I think it always will be a backbone, but I think the potential and the ongoing devaluation of the dollar is certainly likely.
Right. I do agree. Now, one of the biggest things with rethinking the dollar is the idea of encouraging education, where people actually become more proactive on learning about different sectors such as mining as well as the importance of precious metals in their possession. And so in your opinion, would you agree or think that understanding monetary and financial matters would be very important in this day and age?
Oh, absolutely. I think everyone needs to be educated on the fiscal responsibility, how governments are spending the money, where the money's coming from, the international trade deficits that are occurring. It's very powerful when you look at you go back in history and look at the wealth of nations and how economies change over, and how the sustainability of an economy is actually extremely important. How the UK used to be quite a powerhouse. It's been the U.S. for decades now, and it's very important for the U.S. to maintain that dominance going forward. However, there is going to be pressure on the U.S. dollar in terms of valuation metrics.
Right. Now, you mentioned pressure on the U.S. dollar. So right now, and here we're experiencing what is called trade wars, where it's a lot of back and forth between our president here, Donald Trump, as well as the Chinese government there in regards to just surpluses, deficits, and whatnot. What are your thoughts on that, and how will that play into the whole mining sector? Because China consumes a lot of the commodities as well as resources. And so how does this trade war go back and forth? Where does this go, and what are your thoughts on this matter?
Well, thanks, Michael, for that question. If you look at the trade wars between, in particular, the most recent one is between U.S. and China, in the trade deficit that the U.S. has and the Chinese surplus. The Chinese surplus is actually using this. The Chinese are actually using this to actually build a lot of infrastructure. This is long-term thinking. They think decades and generational. And I think that going forward, that's going to be an ongoing, I guess, pressure on the U.S. dollar, because for the U.S. dollar to maintain its dominance, it's got to continually invest into the U.S. economy. The U.S. economy has to continue to grow year after year at a certain percentage. It is ultimately in competition with China for growth. And the long-term implication here is that the U.S. has got to continue to compete effectively to maintain its dollar's value. So this trade balance that we're seeing now, the trade wars you mentioned, it's very important because it's not sustainable. There will be a resolution at some point. The question will be what the implication would be long term. And I think China, with their long-term view and how they've devalued their currency over a decade now, they've had this strategy that is been quite beneficial to them. And the U.S. is actually, it's the way they're going about it is interesting, and they're trying to defend themselves. So I think that's really important. But I mean, it's a long-term conversation. These are long-term strategies. And I think ultimately it's going to put pressure on the U.S. dollar again.
Right, I do agree. Now, talking about the U.S. dollar, when it comes to monetary policy, especially right now, there's a big war back and forth, another currency style war where they're talking about devaluations and whatnot. And so, to talk a little bit about monetary policy, can you share with us your thoughts on how right now we're supposed to be in economic expansion, but yet the Federal Reserve is looking at quantitative tightening as well as raising interest rates. Can you share with me your thoughts on how that might impact the economy if we are in such a great economic expansion as they say we are?
Yeah, if with rates rising, of course, it's going to have implications on the stock market. It's going to have implications on home purchases. So we're going to have a negative wealth effect, on multiple different levels, right? So, for example, people feel wealthy because the housing value has gone up, and it's gone up quite well over, quite much over the, since 2008. But the concern now is that you have a multiplier effect. You have a potential implication where the stock market has been quite beneficial last year. We've seen some trouble recently, but with the stock market coming essentially down a bit with the increase in rates, then we have also increase in mortgage rates. The wealth effect is multiplied there. So what does that mean? It means that potentially less consumption. So you have less consumption, you have slower growth. It's a feedback loop, right? Mm-hmm. So the overall concern now is that the U.S. economy will slow in the next couple of years as it braces for these higher interest rates.
Right. Now, earlier we hinted at deficit spending. And so if the United States of America, the subject is dependent upon borrowing, at what point do you think that the whole idea of just continuing to fund things by borrowing might come to a halt? And then, in your opinion, of course, what might be some repercussions for solely living upon debt, as the United States government has shown that we do best?
Well, I don't think anyone thought the deficit would be or the debt would be a total of $21 trillion at this point. So, and that's funded largely by other countries buying U.S. bonds, right? Mm-hmm. So when they start demanding higher yields, that's going to have implications again for that multiplier effect that we just talked about. So so I think from a monetary perspective, the ability to keep printing money, to keep trying to promote growth, it can only go to a certain extent, and then there has to be sort of a cooling off period, and that's the concern now. If there's a cooling off period, how long will it last? What's the implication? Could be a soft landing. And no one wants a hard landing, of course. That would be unfortunate. So the key is to kind of migrate and navigate these waters very carefully as we go through. But ultimately, I mean, in terms of printing money and having a large debt, it has to continue. There's no way that this can be repaid over anyone's lifetime at this point. So it's about managing and navigating it through its course and making small changes along the way. I don't think anything drastic is necessary at this point, but we're going to see a and going back again to the dollar, we're going to see a continued devaluation of the dollar. And this, when you look at what's happened, is that China and also Russia have been buying gold and other currencies because they kind of see the devaluation occurring. I mean, I can't speak for them, of course, but you can see their strategies ultimately from a macro perspective is that they're slowly moving away. They can't move away very suddenly because that's going to have a greater impact because they do have a lot of U.S. bonds. So they're carefully, doing this type of strategy over a number of years, and this can continue into a number of decades, I believe.
All right. Now, in your opinion, how does this impact the current reserve status of the Federal Reserve note? And so for the last 70 plus years, the dollar has been the dominant currency that's been needed in international trade. So in your opinion, of course, can you see a time where the Federal Reserve note is no longer relied upon or trusted internationally? And so kind of hinting at the idea as to why they're accumulating so much gold out in the Eastern Hemisphere?
Well, I think ultimately it will have its place in the world economy. I think it always will. I don't think it'll be replaced easily. There was actually about 10 years ago, the renminbi was thought about as being the new dominant currency going forward. I still think the U.S. dollar will be the dominant currency going forward, but I think there will be a lot of people hedging themselves with other, as we talked about, gold. There might be other currencies, but again, every economy relies upon a little bit of inflation to sort of maintain growth at a certain rate. So gold is, there's only so much gold in the world that you can fit into a size of an Olympic swimming pool. So I think gold has always been sort of the go-to metal as a safe haven for U.S. dollar devaluation or U.S. dollar inflation. So I think we'll continue to see more of that. So yeah.
Fair enough. Now, as we move more into the gold mining sector and just talking about gold in general, it's always been considered a safe hedge against inflation and things of that nature. And so it's been doing quite well in comparison to the stock market, which has been very volatile the last couple of months. Share with us your thoughts on, just from a personal standpoint, of the importance of having precious metals and sound money in your possession amongst all the things we've been talking about so far.
Yeah, well, I think gold should be a part of anyone's portfolio. I think investing in a little bit of gold, depending on your personal wealth, makes a lot of sense. Does, as you mentioned, is a good hedge against U.S. dollar inflation, U.S. dollar devaluation. We don't print gold, but we mine it and we sell it. But the key thing is that there's going to be a supply deficit going forward. A lot of the major mining companies are not mining as much gold as they have in the past. We have a situation where not a lot of exploration has been done. There has not been large deposits found or mined. So there's been a depletion, and there's going to be a gap going forward. People talk about peak gold and how gold's going to decline in terms of supply going forward. So it's just going to create that scarcity. So the value of gold definitely needs to be recognized. I believe the gold price will strongly move forward and push higher. Because again, it's an offset to a lot of the inflationary and the printing of traditional currencies. So it does have a lot of merit. I mean, in the last 2000, holding gold, using gold as currency, I think people like the fact that it's tangible. It's not like Bitcoin and other things where you really can't see it, and
right.
You might lose it on transfer and so forth. But human nature tends to bring us back to things that are tangible in nature.
Mm-hmm.
I remember back in 1998, 99, when I first joined Barrick Gold, everyone said, "What are you doing joining a gold mining company? Gold's at $260 an ounce," and every analyst is saying it's going down to $200 an ounce, and everything's going virtual.
Mm-hmm.
There's Netscape and all these internet.com companies. I'm a bit of a contrarian, and I got to tell you, within a couple of years, gold almost doubled, right? So it just shows that when we think about futures and going virtual, we have to bring it back to human nature. Human nature is that we like things that are tangible. We like things that have a store of value, and a lot of the virtual things that we like to think about being beneficial and futuristic, it doesn't usually play out as what I've seen.
Right. Now you hinted at the blockchain and cryptocurrency. There's a lot of companies looking to attach the blockchain along with gold, and as far as tokenizing gold and precious metals. What are your thoughts on that? Could that be the next transition of precious metals in form of people's possession, not necessarily physically, tangibly in their possession, but yet in the form of a coin or a digit linked to some form of precious metal, whether gold or silver? What are your thoughts?
Yeah. Well, I think people need to make sure they educate themselves on the difference between cryptocurrencies and what blockchain is. I think blockchain, of course, is real. It's probably as impactful as the internet was, the way we do transactions and verify. It's only the small crumbs of the payment that comes off a blockchain that we're talking about with respect to these currencies. And there's a war going on with respect to, is it Bitcoin, is it Ethereum, is it Litecoin, is it, so it reminds me of I'll get back to your question in a second, but it reminds me of, again, back in 1998, where we had all these different browsers, Netscape, and where are they now? So I don't know if Bitcoin is going to be the one going forward. It certainly doesn't make a lot of sense from that type of blockchain technology that kind of produces Bitcoin. People like Ethereum, again, but they don't have the speed, the transaction speed. So when you compare sort of these currencies to gold, ultimately there might be a winner with respect to these cryptocurrencies. We're probably talking 10 years out, maybe even like 20 years out. But the amount of speed needed for these type of transactions to actually work, you need something very efficient, and it's not there right now. So I think people are attracted to the speculation, and Bitcoin going to 19,000 and going back to 6 and so forth. So that I don't think that's an investment. I think that's an attraction to buying lottery tickets, to be honest. I think buying gold has been less volatile. Gold is more liquid. Gold is tangible. People have lost on currencies as well. when you look at what do you get from Bitcoin, you can have it on a memory stick, you can have it on your hard drive, you can have it. A lot of companies have transferred Bitcoin from their safe vault to something else, and they've lost something in between through hackers. So how do you store it? So do you keep it at home? Do it still has not been figured out. So I think right now it's new. It's something to talk about. People have learned a lot about it. I think still need to learn more about it to understand what they're getting into. So I think at some point there might be some cryptocurrency that is maybe possible, but we're still talking 10, 15 years out. It's too early.
All right, fair enough. Now, it's nothing like having something physical in your hand is my philosophy here, Rethinking the Dollar. And so as I look to learn into more of the mining sector, so here we go, we're going to talk about first mining gold. So I'm looking forward to finding out more as I dip into that area, because I've been more so of a physical man, but I'm looking to get into the mining and stocks and things of that nature. So first mining gold, give me a little bit of information.
You don't see many people wearing Bitcoins on their rings. You don't.
That's a very good point there. Now let's talk a little bit about your company. You're CEO of First Mining Gold. So give me a little bit of information about your management team and what you guys have going on there, and how your experience has been thus far, in regards to being there at First Mining Gold.
Well, First Mining Gold is doing very well. I mean, first of all, just talking about the team, Keith Newmeyer is our founding chairman. He was one of the founders of First Quantum Minerals. He's a company builder. He's also the CEO of First Majestic Silver. A tremendous individual, a hard worker, almost a mentor for myself. And we got a great team. We got 30 staff. We've got a PhD in geology as our COO, mining engineers, key people advancing projects. The foundation of this company, we were rolling up all these gold projects during a low gold price environment. We had a total of 25 projects, but there are basically four key ones, if you will. One very big one, with almost 5 million ounces of gold in Ontario, Canada. It's one of the largest undeveloped gold properties in Canada, if not the world. There's a scarcity of properties like this. When actually in production, when we get it advanced and so forth, it'll produce about 300,000 ounces a year. I've got as you mentioned, my background. I've worked on projects in Africa and South America, and we haven't found the technology to move the mines yet. So having a property of that size in Ontario is generating a lot of interest. Our new strategy that we kicked off this year is to advance these properties, to realize value for our shareholders, to maximize the value of these properties within the confines that we have. So it's great. We're doing really well.
All right. That is good. Now, as I mentioned, I'm just getting to the whole mining shares industry and studying and learning for myself. So in just looking at First Mining Gold, I looked at your guys' ticker on the Toronto Stock Exchange. It looks like about 3 years ago, it was valued at about 40 cents a share, and now I look at, as of today, it's about 53, 54 cents. So in your opinion, what's changed in regards to the value?
Well, thanks for going back in history, because when we first started off being 40 cents, I mean, that was when the whole strategy started with Keith and the team, and they, again, accumulated 25 properties over 3 years in a low gold price environment. It's been tremendous. And then actually now we're in a situation where gold is over 1,300. And we're actually now starting to develop and advance these properties. So when you look at the valuation metrics, the big property in Ontario I'm talking about is called Springpole Gold Property. We just did a preliminary economic assessment on it, and in US dollars, it's about $800 million in net present value after tax, right? So if you look at all of our properties together, you get a total valuation of about $1.4 billion, and our market capitalization is just around $300 million right now. So you can see the difference there. As we advance these properties, as we realize intrinsic value, that's going to put a lot of pressure on pushing our share price higher, our market capitalization higher, and that's the strategy we have.
Sounds good. So Jeff, according to the information I found on your site here, it says that the net present value of the Springpole project is 4 times more than your entire market cap. And so how is that possible?
Well, thanks. And just the economics for a second, like $800 million US, the IRR in the project's over 26%. Again, the capex is only $700 million. The stripping ratio is very small, only 2 to 1, and about 300,000 ounces per year. So it certainly scarce. We kind of call it sort of a big boy or big company project, because any large company, like I won't name one, but they would certainly love to have this project. They certainly want to advance this project. So when you look at our market capitalization, we've just changed our strategy about 3 months ago So we've hit a lot of milestones recently. We've done a lot of work. We're going to continue to do a lot of work for our shareholders as we advance this project. So as we advance this project, what we're talking about is the environmental assessment. We're talking about doing all of this work to recognize that value, to realize it's going to be permittable, realize it's going to be in construction, realize that we're going to get gold out of the ground. So the key thing here is to actually build that intrinsic value. And that's going to definitely put pressure on our share price, as I mentioned, to realize value for shareholders. So it's a great time to be associated with our company, to be invested. I'm investing my first year salary in the company. So I've already bought 142,000 shares. I'll continue to buy all this year and to demonstrate my commitment. We have the opportunity here to build a large gold producer in Canada with these 4 properties that we have in Ontario. We also have one in Newfoundland called Hopebrook, so which we'll be looking at as well. We've got this foundation, this tremendous foundation for growth. Okay, other mining companies, they have to go to unsafe jurisdictions. They have to deal with a lot of other cultures and permitting environments that are not clear, legal frameworks that are not understandable. So we're very fortunate to be in one of the top mining jurisdictions in the world, in Eastern Canada.
Well, Jeff Swinoga, I appreciate you for joining me on Rethinking the Dollar. It's been great for me to find out more about your project you guys got going on there. And also, as I continue to educate myself on these matters, looking forward to finding out more and following what you guys are going on there. So I'm going to actually put below this video the description with more information as to First Mining Gold there, so people can get in tune with what you guys have going on there, as well as take a look at the project as well. So any last thoughts you want to leave us with here at Rethinking the Dollar?
Oh, no, well, Mike, it's been a real pleasure. I have to tell you, again, we've got a great team. We've got a great founder. We've got, again, a number of projects. I think people should go on our website. They should learn more about us. They should go on your site as well, and really educate themselves about us, because we're going to do very well in the future. We've set ourselves up to do well in Ontario. We've built an overall framework, because it's a long-term strategy. We talk about long-term strategies with the US dollar and what's happening with international deficits and so forth. We're thinking long-term, and we wish shareholders to learn about us and to join us on the journey here.
Well, Jeff, thanks once again for joining me. Look forward to following what you guys got going on there, and definitely feel free to click the link below for more information on what's going on in First Mining Gold. And other than that, Jeff, enjoy the rest of your day. Thanks again for joining me on Rethinking the Dollar.
Great. Thanks a lot, Michael. Take care.
My pleasure.